In the last 1 month, the Kenyan economy has been battered by serious headwinds caused by coronavirus pandemic. The Nairobi Securities Exchange has lost almost 20% of its value, while the Kenya shilling has sunk to a 15-year low, closing the trading day today at 104 shillings against the US dollar. The government has so far banned flights to and from infected countries, cancelled meetings and conferences while urging people to stay at home. This is expected to hit the economy really hard, with the Central Bank of Kenya having its year 2020 economic growth projection to 3.4% from an earlier projection of 6.2%. The bank says disruption in supply chain and low tourism numbers will hurt the economy. Kenya Airways has banned all international flights in a bid to deal with the pandemic. The bank has further reduced the cash reserve ratio for commercial banks from 5.2% to 4.2%, a move that will release more than 30 billion shillings for onward lending. Foreign reserves currently stands at 826 billion shillings, which is enough to support the economy for 5 months in case of a major fiscal crisis. Economic analyst Ali Kansachu says the bank needs to come up with more radical steps like cash transfer initiative to rural communities to spur spending.
If we go, God forbid, down the route that we're seeing in Italy or in London or in New York, when you're closing down whole cities and you're killing the demand that comes from these enormous urban economies. So if one looks ahead and says, if that is a scenario, then therefore you're going to see a massive demand shock as well.
The Monetary Policy Committee has also agreed to meet next month to review the situation, and the country outlines more measures to deal with the pandemic. Central bankers from around the world have all slashed benchmark lending rates to spur economic activities. O'Brien came in for Business News Hour.